So what you need to understand as well is the difference between what's called a pre-qualification and a pre-approval. So what's the difference? A pre-qualification is basically you verbally telling the loan officer what you make as an income, what you have as an assets, and what your credit is. So just based on your own knowledge of what your credit is. A lot of apps out there, and some credit cards offer you at least offering your credit score, at least one of them. So you probably do have some knowledge of what your credit score is. Now, what the difference is going to a pre-approval status is that you're submitting documentation and the loan officer is verifying that documentation to be true and accurate. So some things that you would need to submit, for one, is to verify your income. So if you're on a base salary or an hourly wage, a W-2 or your pay stubs are going to be necessary. So at least 1 month's worth of your pay stubs and 2 years worth of your W-2s would normally be suffice if you are receiving income in a standard fashion. Now, if you are self-employed or you receive income in a non-traditional manner, you would probably need to submit your last 2 years worth of tax returns with all the schedules associated with it. Now, to verify your assets, these are things like your checking, savings account, and your retirement accounts. You would need to submit typically 3 months worth of your asset documentation, so with all the pages associated with it. So if your checking account that you receive or that you can print out from online says that it's 1 to 5 pages, make sure that you bring all 5 pages to the loan officer so they can make copies of that information. Now, getting into your credit, whenever you're doing the application, the mortgage application, they're going to pull what's called a tri-merge credit report. So it's going to be TransUnion, Equifax, and Experian. And by pulling all 3 of these, they would typically take the middle of the 3 to determine what loan program that you qualify for. These credit reports are also going to pull what your liabilities, your debts are, and to show what kind of history you have. Also, if you have any judgments or collections or bankruptcies, this credit report is going to show that. So very important to get that tri-merge credit report pulled instead of just relying on submitting that I have a 640 credit score that I pulled from some sort of app that you have. So with all that information, then what the loan officer is going to do is package that information into a loan application, submit it to an automatic underwriting system to determine if you are eligible for that particular loan program. So getting into loan programs, that's another video, but that's basically if you get a approved eligible verification on that underwriting, you can basically receive that pre-approval from the loan officer. They'll write out a letter saying that you qualify for a home that's worth, let's say, $200,000. The loan amount is going to be 95%, and this is your monthly payment, term of 30 years, and so forth and so on. And that pre-approval should accompany any offers that you're going to be submitting for the house that you wish to purchase. Now that you have your pre-approval, let's go shopping for some houses. Now, if you need any help with finding reputable loan officers or mortgage companies within the area, please feel free to reach out to me and I'll be happy to recommend you some good loan officers within the area. So hopefully I'll hear from you soon. Take care and good luck. Bye.